The views and opinions of this program are those of the host, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Today's episode of Market Talk is brought to you by Growmark FS. Keeping up with the latest in ag is a challenge, to say the least, but there are experts nearby ready to help. You'll find them at your local FS. You can trust them to bring you customized agronomic, grain, and energy solutions born of the latest thinking. That's because FS specialists receive continuous training that keeps them current on the latest trends, practices, and technologies. So you'll get local expertise that's both exceptional and up to date. Visit fssystem.com to learn how FS is bringing you what's next. Well, the grain, livestock markets, and the outside markets fully open on Monday, July 3rd after a weekend that we saw good rains across parts of the Corn Belt and ahead of the 4th of July holiday with no markets on Tuesday. We also got those USDA reports on Friday that gave us plenty of surprises that still kind of impacted the market on Monday. Let's talk about it. We welcome in John Heinberg with Total Farm Marketing. John, hopefully you had a good weekend, and like me, you and I both working on a Monday with the markets open, and it's always interesting coming out of those USDA reports and getting into the month of July. And as I mentioned, we saw a lot of volatility from Friday, and some of that carried over into Monday's trade as well. It looked like, John.
At least did on the overnight session in the soybean market. It went up and took out some new highs and put some good value back in these beans. Now we faded off those highs pretty aggressively, whether that's just a little bit of profit taking given the holiday tomorrow, the fact that we don't have night session tonight or night session again. We don't trade again until Wednesday at 8:30. Probably a good spot after a heck of a rally to take some money off the table in the bean market. Corn today just never could get any traction. We tried to get back about $5 on December. That just seemed to be a bit of an anchor. Had a little fade in the wheat market towards the end of the day and just pulled corn right down with it. Now, what do we got in front of news over the next couple of days? Obviously, we got crop ratings coming out this afternoon. We'll see if that rain that did come through over the weekend helped out a lot of those areas that need it. Does that stabilize this crop any? And then from there, too, just keep an eye on those weather forecasts the next few days. Everything's still looking pretty unfriendly for price, at least in terms of weather favorable for corn production or getting this crop maybe back on its feet a little bit more.
Yeah, good points. And thinking about that weather, I know we talked with Eric Snodgrass and some good rains, but also looking ahead here, this forecast, the 10-day, got some more chances for roughly 70% of the Corn Belt supposed to see some form of rainfall. But again, did it help out? Does it verify? Does it stabilize this crop? I think that's the big push-pull in this market here as we get into July now, John. It's weather versus what USDA served up to us on Friday. Because, those acreage numbers, way, way different than what pretty much everybody was expecting, John.
Very much so. Obviously that corn number coming in where it did, largest number since 2012, and eclipsing that by 100,000 acres, basically. And, that just still comes into play here. How does this all shake out? It was really just kind of basically a market reset is what it was after that report came out. The bean side as low as it was. And, I think today, and really the market's still trying to digest where all these numbers need to go. And we may have a hard time doing that until we start getting a grasp of what the yield's going to be after the USDA report on the 12th, and see what adjustments they make. Even if we don't make any yield adjustments, which I expect they will, we added, say we've got a 170 yield out there. That's an extra 340 million bushels to the pile, and what's going to be an excessive corn market. Plus then you got demand factors that we've already been saying already that we think are high. Maybe some of those if those move around, we'll have to watch. So kind of a nervous time right now for me in the corn market, especially now. I've got some lower side targets. We're kind of poking at them already, but if we take those out, where does this go? That's the negative to this. So not to sound like a Debbie Downer here on the 4th of July holiday, but just the price action today just told you that nobody really wanted to step into the market, even though it was thinly traded. And then with the weaker close, it really kind of sets us up for maybe a negative tone on Wednesday, if we don't get anything positive in the news front over the next 48 hours.
Well, and with that corn trade too, I'm also worried. Obviously, corn is king. We saw it with the acreage numbers, and we got, more plantings of corn. But on the flip side of that, the demand picture is not too great for U.S. corn. And you look at the world market, there's a lot of cheap corn out there, John. Now, we could debate whether or not it's as good a quality as U.S. corn, but the fact is there's a lot of cheap corn out there. And as it stands right now, people are buying U.S. corn, John.
Yeah, you go look at those global prices, Argentina, Brazilian corn, which again, they're still in the harvest on that Brazilian second corn crop, trading significantly underneath ours. So we're not going to see any demand move at this time frame unless it's more on the domestic side, feed usage, lock-in mentality. But even that right now, if I'm an end user in terms of feed concerns, obviously the weather's still a factor. We'll still need to see what happens to the yield, but you should have enough ample supplies that you can be a little bit hand to mouth in this window instead of having to scurry and get coverage in on like we've seen in the bean market as with that acre number. Anybody that was looking for further down the road supplies, they had to get coverage now. Hence why we saw the explosion in bean prices versus the corn market.
I think with D's corn, I have to think $5 again. That psychological $5 mark is going to be our overhead resistance now for the near term. John, do you think so?
I would agree. Right now you start tweaking balance sheets, you start putting those acres in, even taking a handful of bushels per acre off. We're still talking that 2 billion mark level in terms of carry out. That's not even talking about where the demand could get to or doesn't get to. So that's going to probably put a pretty good ceiling here. Now, we can still have a lot of volatility. If we get crop ratings today, if we don't see any improvement, maybe the market kind of reacts to that a little bit and we see some money flow. But right now I'm watching that money flow. Funds were still long last week on Tuesday. Obviously, after the report and we had selling pressure going into that, maybe they're back to square. Now the question is, do they turn this into what they did with wheat, which is put it into a short position and hang on to it and battle anytime it tries to rally out of there and keep it back in that short side of the coin? Unfortunately, because of the potential supply picture, that might be just the mindset of the money flow here until proven otherwise. So it wouldn't shock me that we stay under pressure here, barring any real changes in the weather, until we get some more concrete evidence, boots on the ground, combines rolling, things along those nature here, just telling us that where this crop is or isn't in the long run.
With the soy complex, one other thought there as well, John. I know obviously Friday's numbers, big move to the upside. Saw some of that follow through Monday before we faded. I asked the question on Friday. I said, do we think that the top is blown off the soy market now and we can keep going higher? But then Monday's trade, low volume, made me feel like, well, maybe we've done all we're going to do for now. So soy complex, I know the carry out very tight for U.S. beans now, really no room for error. What's your thoughts here, upside potential in this soy market? Do you think there's more to come, or will we kind of level this thing off, John?
I think the key is going to be, do we find some more demand? Okay, that's going to be, in my mind, where we're at here. We got a little better picture on where the supply is, at least with the acres. It is going to be tight, no ifs, ands, or buts about that, at least at the current level. You put that acre number into any of the balance sheets, even where demand is at this time frame, you're having a hard time getting back to 200 million bushels of carryover. Okay, that's a tight supply. Now, obviously, with prices rallying, the USDA will look at the demand picture. They will make some adjustments there. We will have to see how that plays out. The biggest thing is we need to see some physical sales actually occurring. Right now, we're still more expensive than the Brazilian bean. They still got a long tail on that crop in terms of that export harvest. Our export sales numbers for the new crop market year are still very, very disappointing, for lack of a better word, at this time frame. So we need to see some of that business wake up, some end users stepping in and saying, hey, U.S. beans might be a little tighter supply. We need to lock them in. Excuse me. Now, over that, we obviously got to balance out the domestic demand of what's happening there, the crush situation going forward. Mm-hmm. But, it's still, we need to see something physically occurring, I think, to get this market to really kick in again. Until then, maybe we hold in here, maybe we just consolidate, stay choppy, focusing on the weather, keeping an eye on if that demand does occur. But if that doesn't happen, maybe we're overpriced here again, and we're going to have to drift this thing back down and try to get that demand caught back up again until we are the only game in town on the export front. And that's not going to happen until probably the 1st of September or early October.
John, over in the wheat trade, we faded quite a bit as we went through Monday's session, and I know KC wheat was the upside leader. That made me think, okay, maybe a little bit of a harvest type rally here, but then just felt like low volume day. We took profit on that wheat trade. all three complexes. Is that kind of the sense you got? Because I ain't seeing any other news stories in this wheat market, John.
Yeah, I would agree. So, I mean, the technical picture was already falling apart going into the report. We got nothing on the report that made us feel comfortable about it. Throw in the fact that we're getting fairly large corn supplies on top. Again, we're still struggling globally in terms of the export shipments today. Nothing to write home about there for wheat. So again, it just kind of turned into a same old mentality, and then driving that wheat price a little bit softer. I said the technical picture was kind of put together on Friday with the outside negative day pushing lower, closing at the bottom of the session. So maybe we saw a little bit of profit taking to start the day, and then the true trade kind of kicked in. Until we get, again, same story, until we get competitive on the global scale, it's going to be real hard for wheat prices to rally. The funds are still holding their short position. They added to it last week, obviously, with the way things closed, in my mind. We won't get confirmation till the end of the week on that. But again, it's just right now, the wheat market is just not a place where buyers want to stay active in it. And we saw how fast the money premium moved off last week when the wheat market peaked out and lost nearly $1 in 2 sessions.
We're having a conversation today with John Heinberg of Total Farm Marketing. John, let's move to livestock. Hogs, holy cow, what a day there on Monday ahead of the holiday. Some really good strength. Looking at that product market as well, everything just the hog market definitely did not tiptoe into the 4th of July holiday. What's your thoughts there?
Yeah, we got a little bit of stockpiling here. Retailers trying to lock in some supplies. Big jump in hog retails at midday, pushing nearly $6 higher, well over the $1 mark, pushing 105, 108 area. And then throw in there a cash market that was up a couple bucks on the direct side this morning too. So, the hog market's kind of acting like the cattle market's been acting for quite a while here. Retail value is good strength, cash market on the trend. It was good to see that August contract get through that 100-day moving average. We've been sitting underneath that now for about a week and a half, if not even 2 weeks, just trying to get through. Solid close above that today opens up the door for some more technical buying, I would say, as long as the fundamentals stay there. Might be getting a little long in the tooth, though, so we need to be cautious. The closer we get to the 100 mark, definitely make sure you're thinking about protecting some value here. But you got some money flow into the hog market, which still, we talked about the short positions, long positions. Just last week's commitment of traders, hogs finally got back to a positive side in terms of length. And so there is some room for them to push this, and maybe that's the case right now, especially given the way the grain markets are acting, that maybe we see some money flow over into the hog market, beyond this point that we are here. But again, a little cautious as we start getting close to that $100 mark. That's kind of that mental, psychological value. And we still have a decent amount of hog supplies out there, at least, according to the quarterly hogs and pigs report, here on the front end.
On the cattle side, I'll start with the feeders. Obviously, huge up day Friday with corn falling apart. That relationship between feeder cattle and corn kind of evident again on Monday, with corn relatively quiet, feeders relatively quiet on the day. What's your thoughts in the cattle trade starting on that feeder side, John?
Realistically, it sure feels like we got another leg coming here, especially with corn prices staying on the decline. That just puts that money into that feeder market. Obviously we need to see that value carry over into the live side. You're seeing that April cattle 188 today for live cattle for next fall or next spring, excuse me. So that just keeps pushing those feeders higher as well. It's still about that supply picture. Yeah, we saw placements up a little bit last month on the quarterly, or excuse me, on the cattle on feed report. But we're still not seeing heifers moving yet. We still got heifers staying in the feedlot. There's going to be some good demand here for feeders. At least at this time frame, now that maybe some of these production costs are coming down. So, I'm still friendly to this cattle market. It's a seasonal window. We get a little turn higher here, maybe to the end of July. We'll have to kind of watch that. Then when do we put that summer high in? But again, the supply side, demand side is still relatively strong overall. Look at retail values yet. Choice select spreads at 35. That just tells you there's not a lot of higher quality beef out there, and that's going to keep the bid up for those, which still supports that overall live cattle market and the cash side.
Yeah, and that cash side too, I fully anticipate we're not going to see much activity until Wednesday afternoon. I'll be shocked even. I'm thinking more Thursday, Friday, just with the holiday week in front of us here, John.
Yeah, very much so. And, we've been trending lower the last couple of weeks. But again, it's still well supported. I mean, we were pushing near the 178 to 180 level, depending on north or south. That's still good levels of cash that's out there. maybe not enough meat on the bone compared to what we put the input costs in at that time frame.
Mm-hmm.
But again, that's still enough to keep this market supported. August now is now the new lead month, trading 176, a little bit short on the cash side in terms of its value. Wouldn't be surprised that we see some more push here, at least on the short term, as long as that cash market can stay higher. And then again, still look at that long-term picture where we are in terms of cattle supplies. Demand still holding in there. Still got a pretty friendly chart, at least in some of those deferred futures well into 2024.
Dairy market, it's been tough for us to talk about here the last couple of months. And again, on Monday, a little more red on the screen there in dairy. Any notes, anything positive to touch on in this dairy market, John, or is it still kind of just trending negative right now?
This is probably the hardest hit markets we've got right now, at least in terms of longer term downtrend. I mean, we've been on the slide now basically since February in the dairy markets, and we're just not seeing that demand kick in. Then too, you're just watching what's going on with the product side, the cheese side, and how that's moving, where the price of cheese is. Blocks at 139. They get a little bid today. Barrels at 132. Milk price is still at 14.15. That just doesn't correlate. I'm not sure what's happening in terms of the news effect, but you're hearing stories now. The USDA and federal government's trying to limit some of the chocolate milk supplies to the elementary grade levels too. That's a key. I understand the health component of it, but at the same time, it's just not another negative story for the marketplace in terms of demand overall. So, just right now, the milk market's on a slippery slope. Felt like maybe we put some lows in again last week, but that disappeared again this morning with the close today. And the market just looks overvalued right now, given where the product and the demand is, which is unfortunate to say that for the dairy producer that things are tough right now and don't look like be improving.
John, great thoughts as always. Before we let you go, anything final you want to share or reiterate for folks today?
It's going to stay volatile. Don't fall asleep in that bean market. You had a heck of a run. We still got a lot of competition out there, good value. Maybe it's an area. Make sure you get some floor in. On the corn side right now, that was just a big miss. In terms of the acres, really kind of throws the whole balance sheet out of whack at this time frame. Be an opportunist here. Make sure you're still protecting. We talked about buying puts now for a long time, just keeping a floor underneath this thing. And that's even heightened now as things seem to be even changing to the negative side even more so. But it's still going to stay volatile. It's summer weather. It's going to change quickly. Yes, we got moisture, but we're still at a deficiency in some areas. It wouldn't take much. A week of hot temperatures and some dryness, and you're going to hear that chatter come right back in. So just make sure you take advantage of things. Supply pictures are growing, at least on the corn side. So make sure you take advantage of when the opportunities are there too.
Well, John, if folks need some advice to take advantage of some of those opportunities, we get through this 4th of July holiday and more, I know they can reach out to you there at Total Farm Marketing. What's the best way to get a hold of you, John?
Sure, love chat with them anytime. Give me a call, 800-334-9779. Shoot me an email, johnh@totalfarmmarketing.com. Again, that website of ours, totalfarmmarketing.com. Take a look at it, a lot of great information for you. Feel free to reach out. Love talk markets with you anytime.
John, happy 4th of July. Hope you enjoy some brats and some fireworks. Thanks so much. We'll talk to you again next week.
Sounds good. Everybody have a great 4th of July. Be safe, and we'll talk to you all soon.
And that's going to do it for the show today. Find us online, markettalkag.com. I'm Jesse Allen. Have a great afternoon.